Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. Welcome back to the show, John.
Jim, it's a pleasure to be back.
John, last week, Midland Exploration released results for its Mithril drill program, and the stock dropped. Is your hope for a great Canadian area play that brings a junior resource back to life dead?
Well, it is not dead, but the fulfillment of that hope has been deferred until at least mid-July, when we see the results of the 5,000 meters of drilling that resume in June with 2 rigs. Midland reported the results for 10 holes, 2,400 meters that it drilled from mid-March until about mid-April. And the market, based on the sort of 2-kilometer long IP anomaly and its width of, several hundred meters and boulders on surface as high as 17% copper, was probably hoping for a large body of sort of 200 meters by 2,000 meters, maybe 150 meters deep, open pittable, a nice slab with a copper grade of 1%, 100 million ton body, and that would certainly be world class. That would be a complete green light for stepping into delineation drilling and starting to talk about bringing rail into this James Bay region, because you do need a system of 50 million plus tons of copper to make copper a viable metal to produce in this remote region where infrastructure is a challenge. Gold exploration, lithium exploration is fine. You can fly that output out. But copper, you need to bring a concentrate out, of which only a portion of it is actually copper, and ship that to the smelter. What the company delivered was, instead of 100-meter intersections of 1%, the best was 12.5 meters of 1% with gold, silver credits. But the broader ones that they reported, where they averaged it out, 139 meters of 0.15%, 52 meters of 0.13% copper equivalent, that just doesn't do it. That's marginal even in places like British Columbia. And what it seems to be is that we have instead of a paranise, which government had originally mapped this as, which is sort of older rocks that have been deformed and metamorphosed extensively. These Archean rocks, and are all over 2.5 billion years old, have been intruded by a granodiorite system, and it itself has been invaded by granitic dikes and also later barren pegmatite dikes. It seems that the granodiorite body is mineralized, and the higher grade seems to be associated with these dikes, which have a somewhat richer grade. So you get this variability of grade from low grade, general low grade, to these high grade spikes. And what was sort of frost heaved onto the surface, we had a whole range of boulders from lower grade to higher grade, and clearly the higher grade are the smaller percentage of the volume of this system. So the target that they drilled, which all started with the Pamela showing in 2011 that a geologist plunked down in the middle of a square kilometer part of the grid that he was mapping, happened to take a sample of, and that's where Midland's crew went last summer, and they checked it out and then beep mapped the area, ran around with their beep maps and picked up all these boulders and said, okay, this is a target. The IP came through. It's a great target. We rush in there in winter and drill it, but the results do not signal a world-class discovery. But in my view, it does signal the edge of a mineralized system that has copper in it, where copper reaches pretty high grades. And now the question is this all there is to it? And the market's reaction has been, well, you have some piddly little copper system that's never going to amount to much. It's game over. Call us when you have a decent intersection like 100 meters of 4% nickel and 3% copper that Diamond Fields pulled from the Ovoid target in 1995. So the next step for the company is, okay, we're starting to understand the geology. We can see that there is there's evidence of copper all over the place, copper that was not recognized in the past couple decades of exploration, because this copper mineralization is not occurring in conjunction with pyrite or pyrrhotite, which rusts and gives you that nice yellowy, orangey color anomaly that attracts geologists with their sampling hammers. We have a very large geochemical footprint to the west on Azimuth's and Soquem's Piqua project from our recent 2016 lake bottom sediment survey that shows 7 to 10 kilometers of something shedding copper to the west. Something similar probably exists on the mithril ground of Midland, and the gradient IP survey that we completed afterwards, after we'd started drilling on the dipole smaller, 500 meter by 4 kilometer survey that they did, and that can also see deeper. This has revealed a parallel target. It's got a bigger chargeability high. It has a resistivity high, unlike the resistivity lows of the target that they just drilled. It's to the south. It's parallel. It's probably deeper than 80 meters, but that's still within reach of open pit mining. And they will be starting at the western end, very close to Azimuth's Piqua property boundary, and start working their way along trend, continuing to infill, especially in the area of hole 6 where they got that higher grade intersection, but also walking the drill along this new target. And this new target, they have no idea really what it is, because the three-dimensional geology is not known. What's on top is a conglomerate unit, which may not have anything to do with the underlying mineralization. So when they resume drilling in June, probably by mid to late June, we might start seeing stirrings in the market that something's showing up in the core that's radically better than what was in the original program. And they are going to be testing some targets, doing further work on the targets that stretch all the way 10 kilometers to the northeast, where they did that 10 kilometer by 3 kilometer gradient IP survey and have a number of additional good IP anomalies. And then they will also be testing a target that's several kilometers south of the main IP trend, and this is an EM conductor. There are not many EM conductors, and EM conductors usually signal massive sulfides, and they've done a couple of IP lines over it, and it also shows a chargeability high. They'll put a drill on there to see what on earth this is. This could be something completely different. It could also be part of this entire system and reveal more information about what's going on. For the immediate area players, that hole will be of interest to 92 Resources Corp, which owns the FCI West project, option 75% from Osisco, and this company, by the way, will be at the Metals Investor Forum conference in my session on Saturday this weekend. They're going to be talking pretty much about what's going on there. Do we have the beginnings of an area play? Do we have the edge of something? Quebec Precious Metals is also presenting at that conference, and they have the Charles and Blanche claims that are nearby. Their main focus is the Sakami project, but they'll be also there, and there'll be a lot of talk about what's going on. Will the Canadian junior bear market be revived by a James Bay area play? Lots of geological speculation. To get in, make sure you go to my website, click on the link, and pre-register so that you don't have to pay at the door.
We'll have more with John Kaiser right after the break.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. John, Scandium International Mining Corp. announced that it has filed a new mining lease application for its Ningen Scandium project in New South Wales. What happened to the mining lease they got 2 years ago?
Well, this problem first came to light on the first day of the year when the company announced that an objection letter had been filed against their original mining lease application in 2016, but it never showed up in the submissions in 2016, and then they got their development consent. And then when the mining lease was granted in May, the owner of the surface rights, who had sent this submission letter, finally asked him, "Where is my letter? I'm claiming that my land is agricultural land, and I sent this letter by registered mail to you. Why have you not addressed my concern?" And the reason he wants his land declared as agricultural land is so that if a mining lease is granted, or if it is an agricultural land, Scandium International could use eminent domain provisions to eventually acquire his land at fair market value to, continue with the ongoing development of the Ningen mining plan. And the reason he wanted this was that negotiations that were going on with the company about buying out his remaining rights were not really going anywhere. He was obviously not willing to come to terms, similar to what he had done in 2008 when Jervois Mining owned the project, and he owned all the land. And then for Australian $371,000 or $1,000 a hectare, he sold a 371 hectare parcel to Jervois, and then when Scandium International acquired the whole project from Jervois, it acquired those surface rights. So the entire infrastructure fits all within the where they own the surface rights. The West Pit, which is the first 7 years of planned mining, sits inside the where they have the surface rights. The East Pit sits on the rights where the farmer still owns the surface rights. And so what's happening now is it's an extortion play to shake down Scandium International. Now, this all should have been dealt with in 2016, even before the development consent was granted, which, by the way, is not affected. It's a different department. But when this came to light, the New South Wales Planning and Permitting Department looked around for this letter and said, "No, we have no such letter." And then even though he said, well, I did send it to you, they couldn't find it. And whatever it is that he showed them he had sent, they said, "Well, we don't believe you." And that was the end of it. In October of 2017, they finally signed off on this mining lease. And that should have been the end of the story, except sometime in the middle of 2018, somebody found the letter in a file that had nothing to do with the Ningen mining lease application, and they brought it to the attention of the people in charge, and they sort of said, "Oh, the farmer's claim was valid. He did send it. We screwed up. We should have addressed this." And so since about October of last year, they've been trying to figure out what to do about this. And one thing they can do is to rule on it and say, well, this is not actually agricultural land, so your complaint is not valid and the mining lease stands. But the problem is, in order to do that, they need to set the clock back and undo the existing mining lease. Now, this has not actually been done, but internal communications were made saying that we have to do this and then address this objection letter. And this was leaked by somebody to Joanne McCarthy from the Newcastle Herald, which is a New South Wales newspaper, which writes a fair bit about the battles between the agricultural lobby in the eastern part of New South Wales, where there is really good farmland and where there's wine country, and where coal miners want to mine coal. And there's a legitimate, battle about whether this area should be messed up by coal mining and instead preserved for agricultural land. The Ningin area is considerably less fertile, and this is only about Scandium, and it's a tiny footprint, and it actually helps out with the cause of fighting climate change, whereas the coal mining, of course, makes it only worse. But the Newcastle Herald spun this as a poor little farmer being used and abused by a corrupt permitting department that is in cahoots with evil mining company. And of course, Scandium International doesn't come anywhere close to qualifying as a mining company or in any respect evil, but that's how it's been spun in the Australian media. And that's why the stock dropped several weeks ago. And the company has been in ongoing negotiations with the farmer. His actual name is Owen Bernard Carter. For some reason, the journalist thought it was important to keep his name secret. He is, in fact, not a poor little farmer. He is one of the largest landholders in the Ningin area. He's in his mid-80s, so, you can possibly spin that as this poor person is being oppressed. But he has a number of children, all of whom seem very keen on maxing out what they get for these claims. So he decided to file a lawsuit against the New South Wales Planning Department in February, and claiming that they improperly handled his objection letter, even though they had pretty much already decided, well, we are going to have to handle this. So what he set in motion was a further extortion play and move in this extortion chess game against SCY, because once you sue the government has time and money on its side. So he, in essence, paralyzed them from making any decision on this. And so what the company's strategy has been, this latest move is, okay, we will refile the mining lease application to include only the land where we have the surface rights. And it sits on top of the development consent that's already been granted. And the department can handle this independently of dealing with the existing mining lease, which they have not yet struck off the electronic ledger. So now we have a three-pronged strategy. One, Owen Carter can do a deal with SCY to sell the land outright, and this is what the New South Wales government would like to happen, because in that case, even if it is agricultural land, the owner can do with it as he or she pleases. But the question is, if it was 1,000 hectares, it's 507 hectares that are in question. At $1,000 a hectare back in 2008, that would be $500,000 Australian. Add inflation and nuisance premium, so that could be $1 million that SCY would have to pay to acquire this, which in my view is not particularly unreasonable. The timing as to when this should be paid and how, that's a separate matter. But we are not privy to what's actually happening in the negotiations between the two parties, so we have no idea how far apart the two sides are. The second thing is that the government can rule, no, this is not agricultural land, and your objection is overruled, goodbye. Eminent domain can be used eventually if you guys don't come to deals, to an agreement independently. Alternatively, they can rule it is agricultural land, and in that case, basically, before they do that, they have to cancel the mining lease. And once it's agricultural land, until the farmer sells the land to Scandium International, the mining lease cannot be reinstated. So then it would turn into a standoff. But this third move allows Scandium International to move ahead with its plans and completely bypass this mess, which is now stalled in a legal quagmire, and carry on. Will this delay the production of Scandium? Well, probably not, because the company is not going to be able to raise $100 million capex until it has filled its purchase order book, and it is still busy developing potential partners through these letters of intent, shipping them aluminum scandium master alloy material to experiment with. And in my view, if they get it done by the end of the year, that would probably coincide with approval for the new mining lease application into a mining lease that then completely bypasses the agricultural land objection of Owen Carter. Could interest in the whole story arrive earlier than that? Well, the trade war that is escalating between the United States and China, which seems to have gone through a point of no return without a serious loss of face by one of the sides, should it be resolved in some way. This is now bringing back into the limelight the draft critical metals list that the United States government drew up late last year to assess America's vulnerability to imported materials that it does not produce on its own. And scandium shows up on that list as China as both the top producer and the top supplier. And it is true that most of the scandium that the world uses, and it's estimated now to be 20 to 30 tons, not the 10 to 15 tons that used to be the case, most of that comes from China. Part of it from the Bayan-Obo rare earth deposit, and the other part comes from titanium dioxide waste stripping. Bloom Energy got that going a few years ago when it had a serious supply problem for its Bloom boxes. It now relies on a relationship with Sumitomo to get scandium as a byproduct from a Philippines nickel cobalt operation. So there has been a surge of scandium supply from China, and that's why the price has been down there at $1,200 a kilo, which has been great for Scandium International because it buys this stuff and then turns it into a master aluminum alloy and then ships it off to other groups. But if this trade war with China escalates, that supply of scandium could end up being shut off. And unlike the case of rare earths, China does not have large, scalable supply of scandium. The scandium that it gets from the Bayan-Obo is limited by the mining rate of this rare earth deposit. And the other scandium actually comes, some of it from domestically mined ilmenite, others from imported ilmenite that it processes into titanium dioxide, the pigment for paint. And the global maximum for that, based on the ilmenite production of the kind that lends itself to this, is probably 80 to 100 tons. So it can never go to the huge scale that its aluminum industry, which is the biggest in the world, could eventually go to for scandium. So they haven't done much for scandium because they do not have a primary scalable supply. But Australia has several scandium deposits that can go into production on a primary scalable basis, and the Ningen project is the most advanced at this stage of these projects. So we could end up seeing interest come into the scandium story, not so much based on when is the order book going to be filled by new application users, but simply as a spin-off from the escalating trade war between the United States and China.
We'll have more with John Kaiser right after this.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. John, there's been a small flutter of interest in rare earth juniors during the past couple of days. Can rare earth mania make a comeback?
Jim, at first I thought it's not possible that we'll ever see anything like 2010 to 2011 when rare earth prices went up 10, 20-fold, and we had several dozen juniors which managed to get hold of old rare earth deposits and find new ones, become market darlings. Stocks like Rare Element, Quest Rare Metals, Avalon, Commerce with its Eldor project, a number of others that all of a sudden we became aware that, these rare earths, they all come from China, which produces somewhere between, at that time, 110 to 120,000 tons of rare earth oxides. And there's about 13, 14 of them, of which about 7 or 8 are actually important and primarily used for the industry and for which prices exist. Now, what triggered that run-up was in mid-2010, a fishing boat got caught in the middle of a skirmish between China and Japan over the Senkaku Islands, and it's part of these territorial disputes. Whoever owns the islands can end up claiming the big sea resources around that, and of course China definitely wants to expand its footprint in its backyard. It's been doing that in the South China Sea, where it has been building up little shoals into airport bases and saying, okay, we are now here. This is our land. Everybody stand back. You can't fly over us without our permission, and you can't sail through this area without our permission. And of course, the United States has been busy ignoring this and setting up a background potential military conflict. Anyways, when this happened, China banned exports to Japan, and Japan was a major fabricator of downstream components that rely on rare earths, and among them are the supermagnets that are critical to wind turbines and the motors in electric vehicles. And then the Chinese producers, which apart from Bionova was a whole bunch of different groups, they all got it into their head, let's start hoarding this stuff. And we saw this massive price manipulation, and it caught the world's imagination. I mean, Moly Corp went from $12 to $60. The insiders managed to unload several $1 billion of their seed paper into the market, and then managed to not raise enough money to prevent the company from going bankrupt afterwards. But what the industry's response at the time was, we're going to have to figure out how to substitute, and substitute they did with other materials, but we're also going to do research on thrifting. And thrifting is figuring out how you can get the same functionality with less physical material of the element that creates that functionality. And so this was all unfolding in the context of globalized trade still roaring along. The neoliberal order was reigning supreme. The gold bugs were busy sort of pumping, yes, free markets, it's all about that. Forget all this protectionist stuff and so on. And the rare earth prices by 2014 came way down. The juniors, which had raised and spent hundreds of millions of dollars advancing these projects, pushing them through the pre-PEA and pre-feasibility study level, and ended up with price decks that worked for their projects, but where rare earth prices are now, it's at a fraction of those price decks. So all those projects around the world are in essence worthless at the current China price for rare earth. And the WTO rule, weighed in and said, China, you can't impose these export quotas. That's against WTO rules. So China got rid of that. And the export the FOB and the domestic prices have been pretty much in line, and the only one that has really continued, that's been stable through most of this time, though, still a quarter of the peak that achieved, are neodymium and praseodymium, which are light rare earths, which are the key magnet inputs, and dysprosium and terbium, which are the two heavies that are needed to make sure these magnets don't lose their magnetism under higher temperature conditions. They have also remained up there, but these other ones, yttrium, which is the key part of the heavy rare earth deposits, and the cerium and lanthanum, that are most of the light rare earth deposits, those prices have all collapsed to below $2 or below $3 a kilogram, compared to $15-20 a kilogram. So we are now in this situation where Mountain Pass had to shut down when it managed to get into production, which is the Californian mine, rare earth mine, and Lynas, it managed to get the cracking plant built in Malaysia, to which it ships pre-concentrated ore from the Mount Weld deposit in Australia. But this ore, it still has to be cracked, and this $700 million facility in China, in Malaysia, it has become a political football, because the thorium is a byproduct, and they don't quite know what to do with it. And whatever they do propose, such as embedding it in concrete blocks and sinking them offshore, that just isn't good enough. So the new leader of Malaysia has said, by September, I want this to be over. Your license is canceled unless you can deal with the thorium. But there's no way they can deal with the thorium and have it not arrive in the ore. So the Lynas supply of rare earth output, which is probably 15,000 tons or so, that is going to come offline. Now the Mountain Pass has been restarted, but its concentrates that it produces are being shipped to China for processing, for separation. So now we have a situation where we have super cheap rare earths for the end users. Their components are all manufactured in China, because the Japanese and everybody said, well, one way to avoid this problem of export controls on rare earths is to just make this stuff in China. And since globalization is the order of the day, that's the smartest thing to do. So we have this entire global supply chain dependent on components whose raw material is produced in China. And with this sudden conflict between China and the United States, which is not just about having China buy more stuff from America, but it's all about China not overtaking the United States in terms of economic and military superiority, and even the pushback on Huawei with its technology declared as an invasive surveillance tool. We have a situation where China is being asked to stand down and crawl back into its hole and be a lesser country, flush its ambitions to rival the United States down the toilet, and let the United States continue as the sort of supreme leader of the world with its 350 million people. That is a fraction of the global population. And that's not going to go over very well. So now we have a conflict that really has no escape hatch. And so we're back to 2010, 2011, where we knew it was this thing in the context of globalization based on a skirmish that was just an excuse, part of a Chinese strategy to transfer more manufacturing to China. Now we have a much bigger, long-lived problem. And while the rest of the world will continue to buy components from China, even though huge tariffs are erected against Chinese components, that material can still flow back indirectly into the United States. But the conflict that we see emerging is one where the China and American battle achieves a military level, where, say, China decides enough is enough. We're going to annex Taiwan. That's where chips are being made. You're telling us you can't use these chips anymore. Well, we'll just take over this country that is actually a province of ours anyways. And that will create a much more serious situation, which the war hawks in the United States will absolutely relish. But that will shut down the shipment of Chinese goods to the rest of the world. So this idea that there could suddenly be a severe shortage of rare earths and perhaps other metals like tungsten and antimony, this is now starting to gain currency in the market. And this is almost a never-ending story because nobody really wants it to come to this, but we're ending up in a standoff which does not have an easy resolution, which could break down any time. So investors are starting to look again at these juniors like Namibia Critical Metals. Its Loftel project, its heavy rare earths, it's hopelessly under the money. They use $20 a kilo yttrium in their price deck. It's now $2.60, and that's 80% of their output from that deposit. And yet the amount of these heavy rare earths that's needed per component unit is not that high. They could actually sustain a substantial price increase thanks to the thrifting, the technology thrifting that has been going on since the first Mania. So the negative impact on the cost of the end product is not going to be anywhere near as severe as it was the first time around. So this story this time has a greater durability and a bigger picture nature to it than it did in 2011. And I would not be surprised to see this a new rare earth mania come back to life and take these juniors that are like trading in the pennies and bring them back to life. In the case of Namibia Critical Metals, its focus in the past year has been on the Konani project, which is cobalt, but cobalt's down 60% from its peak in 2017, and their results are not very good. And it's an interesting hedge on this rare earth Mania 2 story, because their focus right now is on the Rietfontein project, which is an ultramafic system which has never been flown for EM conductors, and they are in the process of doing that. If they get any massive sulfide indicators of potential nickel cobalt deposits, well, they'll be drilling that later this year. It's all under cover of sand and calcrete, so mapping and prospecting is pretty much useless in this part of Namibia. So that's their current focus in terms of delivering a discovery for discovery watchers. But the Loftel project is in the background there as one which could provide heavy rare earths probably faster than any of the other heavy rare earth projects in the world.
John, thanks a lot for the update.
You're welcome, Jim.
We've been speaking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.